Audio morning brief for the U.S. stock market. I'm Rich Paz for Critical Point, Thursday, October 31st, 8:02 a.m. Eastern Time. I'll then work on the weekly update right after this. So the futures are down 40 points. Yesterday was a level 4 top for the U.S. stock market relative to Dow Jones, NASDAQ, and the S&P 500. So the swing is down. And it's showing evidence that we have seen a level 3 top. The trend is down. The level 4 can bottom to late today on into late tomorrow. The level 3 should not bottom till Monday of next week, and that's the earliest. So it could bottom just ahead of the election. It can bottom election day. It can bottom the day after. It can bottom even the early part of the following week, meaning next week could be a down week. Now, in the weekly update, I will go over the larger trends. I won't do that right now. And we'll think about all the possibilities and the politics and everything else. News-wise, the GDP come in at 2.8%. So that was softer than what they had expected. Not quite as strong of an economy. However, one of the spokespeople for Biden came out yesterday and said if you look at it on a long-term basis, the GDP is up like 12%. It's the best in many decades. So we've had a very good run. We need to be proud of what we've accomplished. Biden and the whole team needs to be proud. Fed Reserve, everybody else needs to be proud. And yet, and the consumer confidence took a jump. So people are feeling a little happier right now. All right. But overall, we still remain a divided country. We still have a piss-poor attitude, in my opinion here. We're really not reflecting how good the economy is. And now with this break lower overnight, I think they're starting to think maybe the economy isn't quite as strong, but maybe interest rates are too high. What if interest rates go higher? And yesterday, the UK, the England, they're doing some things where they're increasing taxes by a huge amount, but it's upsetting some things, okay? So there can be some crazy things when we can knock this stock market down in coming weeks here that doesn't have to have anything to do with the election, okay? But right at the moment, for our country, economy-wise, we're great, we're fantastic, we're doing good. As a people, we're not doing good. As the election, anything can go here. And as the future of the election, after the election, it might be horrible instead of being good. Anyways, I've got downside objectives for you. Looking at the futures market, the S&P 500 cash hasn't triggered it yet, but it should. But what we're looking at is 57.65 down to 56.23. I realize that's a very wide range. It's actually two ranges of downside potential, maybe even three. They're all overlapping, and I just said to heck with it. I'll just put it in there. So things could be that volatile and crazy to the downside, and even some of the optimists are now saying, boy, we could be in for some volatile times, okay? But I don't know is they're really going to sell all that much going into the election, frankly. So I don't know how much to trust this, but I'm feeling bearish into next week. I'm feeling bearish into late today, tomorrow, for that level 4 intra-week, intraday swings, the pops and drops, okay? And now, how do I close this? Okay, interest rates really haven't done anything. They've backed off. But now you see they're selling the stock market anyways. So the stock market kind of ignored a lot of this run up in interest rates. Now it's kind of ignoring a little bit of dip in interest rates. It's trying to do its own thing. It may actually be thinking about the possibility of that big jump up in interest rates. What if it hangs in there for a long time? It may now be catching on to some of the potential negative stuff. But I think mostly what we're seeing is around a profit taking a little bit of selling ahead of the election. Past results are not necessarily indicative of future results. Have a great day and be ready for that weekly update. Thank you.